need big risk off to, get yields lower. And that, really hasn't happened. So it held a pretty important level, right, Blake? That 4480 in the S&Ps. I mean, you had that level 4480 for a while, and that was a low yesterday.
Yeah, it was. I think it's really pretty key support here. It's the 618 the retracement of the last leg higher that took us to new highs for the year. So it's a 618. It's a breakout point. Did you want me to take the charts here?
Okay.
Well, no, it's up to you. If I can go revisit that.
I just want to show a few things that.
Oh yeah, go ahead.
Rally.
Please.
Just some stocks. Look at Microsoft, guys. It's do or die time. It's called about $0.50 better, but underneath here 320, 360, 280.
You've seen the breakdown in Apple, right? I know you have. So it's
I watched it levitate. I started shorting at 170, sold more at 185 through options, and I'm still not even. But yeah, that's a broken chart. It's going to come in higher today, almost like this is going to be a hope low. I'm not looking. It looks like it could crash, especially if we start taking out 170, and this was really the breakout 156. So we'll see. I think it's going there. I actually think if we take out 156, then you're talking about $40 above. It was a $40 move above the breakout here. So if we take it out again, subtract 40, that gives you 116 down here. Doesn't it? Is it a little unusual that, remember, they were rebalancing because Apple was? It's almost like they saw it coming. Because they don't. Oh, it's another conspiracy. But
another conspiracy theorist. Well, I mean, it gives everybody an opportunity to get out. Yep.
I mean, wouldn't NASDAQ be even lower if they had not?
If it wasn't rebalanced?
Mm-hmm.
Yeah. Yep.
Okay.
If Apple hits 155, 156, it's going to be a disaster. It's only going to be up 200% from the COVID lows. Just to put some perspective.
Look, and here's the COVID highs, the prior COVID right here. That's $80.
Yeah.
And a lot of markets have retraced to their pre-COVID levels. I mean, I could find a bunch of them that did.
The thing of significance, like you both correctly say, is that Apple and Amazon and Microsoft, they are the drivers. They've been the drivers for years now. So if these generals fail, what happens to the little soldiers? They fail worse, right? So
look at AMD. It's kind of flagging here. It's another semi. All we've done is move sideways. Are we going to rally again? I don't know. It looks pretty vulnerable under these lows here. So anyway, gold still can't get out of its way. I tried to buy it yesterday because I thought the yen would come off. And silver, I guess we already did the post-mortem on it.
Silver snapped a nice ascending trend line, which to me suggests that we're going a lot lower here. So I would think $20 or so is roughly where I see it going. But
I'll tell you what, if that happens, Blake,
you're
going to be able to buy a lot of these silver miners, and if you guys join ForexAnalytix, I'll always keep you updated on these. I have a few favorites. I like this one, and I'll show you why still. Besides the fact that I think we're going to take these lows out and go to 280 to 250 if silver's going to 20.5, which would be 287 would be 61.8 back of the big move we had last year. But the most bullish thing about this is really the monthly. So we've knocked on the door at 4. I think next time silver rallies, it cracks 4. That'll give you 6. But if you look at the monthly and not even know what it is, and so you have this huge range rectangle.
Oh yeah, that you'd play right off that low. Why wouldn't you?
Yeah. And
Yeah.
you know, the breakout of the either range is, well, we can't go negative $8 if we break down. But if we break out to the upside, you know, you're talking $8.
Yeah.
$8 on the range, we give you $18 for tuna. That's if you get like $50 silver.
Oh,
down
can
the
I show
road.
you how I get to 20? If you want to, if you know,
Yeah.
just if you want to see how it looks.
Yeah.
That's a good idea there, though, Dale. I love it, especially on a summer. You know, Ryan, you hit it perfectly today. It is a summer doldrums type of day, especially ahead of tomorrow. We got CPI tomorrow. What I'd like to hear from everybody is how you're going to trade it tomorrow. So get your ideas together as far as CPI. Let's talk for the next 15 minutes. Like, what's your best setup for strong CPI reading, weak CPI reading? Then tomorrow, because we'll be covering it here live, then you can kind of let us know if you have any revisions to that plan tomorrow. But here's silver. There's a long trend line from this is post-COVID lockdown. That's the trend line, comes in right at 20. Heaven forbid we break 20. I mean, Stelios, what are you going to do if we break 20 in silver?
Sell my house and buy more. I don't know.
Wow.
Look,
That's a
there
bit.
is absolutely
Where your daughter's going to stay?
Absolutely no reason. I have more than one house. Don't worry. There's absolutely no reason, with money supply having expanded as it has, for silver to be near 2010 levels. There's absolutely no reason. So that's a thing, though. Timing, leverage, all that. Very easy to get burnt on this.
Yeah, I mean, if and I'm just going to draw this out for you. This is a daily chart. I've compressed it a lot. If we break 20, and silver, right? So anything can happen. I would look at something that looks like that. Should be 1550, which is a 127% extension of that whole, basically 2022, 2023 range. The 78% retracement of the post-COVID lows would take us right to 1550, roughly.
If that happens, I think the S&P is trading at 3,300.
And if that happens, you will lose the house.
I think something big needs to happen for all that to transpire.
Couldn't the dollar go rip roaring, screaming after BRICS tries to fail? Launch some
the dollar, man, with
cock-a-doodle-doo
the dollar through 2 trillion deficit per year. I mean, it's strong as bull, isn't it?
Well, who else has a deficit around here? I don't know.
Everybody,
right?
Yes,
so
exactly.
Look, like I said, the dollar can absolutely rip balls here, especially if we start to see stocks come under pressure. Remember, let's not forget, if we're in a big range, which I believe we are. If you guys hear my long-term view of the S&P, let me just give it to you really quick, and then we'll talk about other things. This is here you go. There's a weekly chart of the S&P. 13 years of a party. We're going to have years of a hangover, and then we'll be able to party again. So we're going to have years of consolidation. Years. You can see what I just drew out. This is 2020. This is 2030. I would not be surprised if we see something like that. So long party, probably a decade worth of consolidation. It's going to be a little bit tougher environment, because people have made a lot of money over the last 15 years, probably stole a whole generation's worth of capital savings in this era of expansion from and low rates from central banks globally. Anyway, with that being said,
financial repression.
Yeah, there you go. You're going to have to be a range trader for probably the next 5 to 10 years in markets. So with that being said, if the S&P turns from 4,500 back to 3,800 over the course of the next 12 months, Where does that put the dollar after the BRICS try to run it over? You know, last time you tried to get so much diversification from the dollar, what happened? The GFC. So, and then everybody, like, you know, the tide went out and everybody realized, holy crap, I don't have enough dollars because I've been trying to diversify away from dollars for so long. So everybody scrambled for dollars back in 2008, 2009. So is that likely to happen again? Sure. You know, so if the dollar, or could it happen again? Absolutely. So if the dollar comes screaming back and we start to see the dollar rally back to 110, that's how silver gets to 15. Okay. So that's it.
What do you have a view on Bitcoin, Blake? It's been acting pretty good.
I don't know what Bitcoin's going to do. I have no idea.
Yeah,
Bitcoin's trading heavy. I mean, it's, you know, trading between 30,000 and 28.5. I couldn't imagine that it would do great in a situation where we have, you know, some
restrictive monetary.
Yeah,
policy.
you know, I mean, you keep hearing about all this regulation. I believe it or not, I think regulation is a good thing for cryptos. I think that'll attract and suck institutional money in. So, you know, I'm a buyer of Bitcoin at some point. I just don't know when. And I hate to be a buyer when the dollar, or excuse me, when stocks are at these levels, and I feel that they are going to come off some. So, you know, for me, it's like hard to press the trigger to be buying Bitcoin at 30,000 when I think I could probably end up buying it at 22 or 20 or 25, you know? So anyway, hey, let's talk about this week, or tomorrow rather. And let's start with K-Man. We haven't heard a lot from K-Man today. K-Man, good morning. What are you thinking here for your battle
Morning,
plan for
K-Man.
CPI?
Morning, Dale. Morning, everybody. What do I think about what?
Oh, your battle plan for CPI tomorrow. What do you think? Yeah.
Oh,
I know it's the summer doldrums. That's why I'm like, we're gonna do a lot of pre-planning here. So
really? Wow. I'm having trouble knowing what's going to happen the next 10 minutes. So I mean,
that's exactly what I say all the time.
I'm joking. Well, I still think that there's a possibility that an overshoot in inflation is going to have a bigger move than an undershoot. But that being said, they're probably looking at how yields corrected. They probably will have equal weights. I think if it comes out in as expected, like just that tad little bit higher again, it's not going to change an awful lot to the world. We are going to need like 0.2, 0.3 or so deviations. And especially the core, I don't know if you noticed, but we're expecting the headline to come off a little bit, but the core to remain, no, the headline to pick up a little bit again, sorry, but the core to continue to come off like 0.1 lower than last time. If that would be the case, I think it's going to be a status quo, really. I don't see too much of a trade in there, to be honest. And then we are probably going to stick inside those ranges and watch what's happening in China, watch what's happening with the emerging markets. That's going to be my main thing, really. If it comes out, well, the rest will be depending. I think dollar yen is going to move because that is most correlated with yields, I would say. And to be honest, I think it's going to take some effort to take this euro dollar sub 109. So even if we get a better print, I wouldn't be surprised that euro dollar holds that low, very low 109s. You know, it's a bit, euro is resilient. Let's put it that way.
It is, and you can probably end up getting a lot of cross rate currents going. You know,
there's a lot of cross trading going on, and if you look at euro crosses, they are resilient. They do rebound relatively easily.
Yeah, they sure do. Well, you know, I've been surprised here actually with the euro. Just you know, technically, we're in an ascending channel, so everybody should already recognize that. But we're hovering around a 50% retracement. We can't even get to the 618, which you know, I think if we start getting, you know, below these lows, then you got lower lows. But notice how we just continue to brush on the underside of this broken trend line. So, you know, I'm kind of I don't have much of a bias with the euro. I was, you know, short through here, and now I've just been sitting not in it. But I think while it's above channel support, it's probably, you know, it's hard to be really bearish the euro at this point, which, you know, if you look at the dollar, this is where it gets really key. You look at the euro and you know the euro is a big, you know, 57% of the dollar index, yet you got the dollar index up against its highs. You think about what the dollar is doing against everything else. That's your cue when you start looking at like the loonie and going, oh, I see why the dollar index is so strong, right?
Yeah.
So, you know, when you start looking at not just euro, but looking everywhere else. So thanks, K-Man. Appreciate your thoughts. Ryan, I know CPI is tomorrow. What do you think is going to be the currency pair on your radar going into tomorrow? I know you're looking at the Canadian, so I see it's a segue right into this.
Yeah. Well, I'm probably going to be on a paddleboard or something tomorrow.
Oh, that's right. That's right. You were officially leaving us for
Yeah, but I might have to be monitoring positions that I'm in, including that dollar CAD. I mean, overall, yeah, we're expecting a higher print, 3.3%. So a jump from 3%. If it does come in higher than that, the market's going to get all expectant over the Fed. I don't think it will get too excited because it's just one monthly report. So I think, you know, whatever the number comes out, I think you need to have your levels ready. 135, if that's still intact going into the CPI data, that's your level to look at in dollar CAD because it's already shown as resistance. So if we haven't broken it by then, that's your place to look. But if we're close to it and it breaks over the data, you want to watch for the few minutes after to see if it holds that break, because if it doesn't, then the level will come right back in as a resistance area. To the downside, I think the dips are going to be hoovered up in dollar CAD if the data's soft. So
can you imagine if we get back below like 133.80? It's gonna let the steam out, and I get a lot of people that are long, myself included, get us to pull the plug on any existing longs. You know, you start getting back below there again. So.
Yeah, potentially, but then you know, just more sensible heads will probably be eyeing that for a perfect place to buy a dip if it's data induced, particularly if oil's not pushing the CAD around too much.
Great point.
Which is not happening today. You know, we've had this potential break in oil. It's looking a bit sluggish in you know, kicking on after that, and I don't like that price action in a break. It's been a really long range we've sat in this oil market, so you like to see a bit of explosion or explosiveness from a break, and we're just not seeing it at the moment.
The 3 drive, Ryan.
Yeah, let me
put up the 4 hour.
We'll give Blake another 10 minutes to try and find it. There it is.
There it is. Thank you. Yeah, up against range highs right there.
Yeah,
it's a big range.
It's a big range, and you know, when you want a break trade, I went with a buy stop on this one because of my thinking. Usually is if you get a break of a big huge range like that, it usually has some legs. You know, you probably should be seeing 85 pretty quickly, but we're not. So still very cautious. If we can't make hay on this break, it's going to be a pressure for oil and then a pressure for dollar CAD, and maybe that 135 area.
Yeah. What do you think about that, Dale? Is that a 3 drive?
Yeah. If you expand it a little bit, it's pretty clear. Okay, you could see it, the last 3 highs. 1, 2, 3. You get.
Then we go to 0 again. Do we go negative again?
I'd say I was looking at the weekly. It looked like, you know, maybe back to 76, where the breakout happened. 77.
Yeah, I mean I mean, I got a nice little support zone down there. So yeah, I mean that's comes in around 75, 70, 74, 75 bucks.
Fib correction back to the breakout, be a nice buying opportunity.
Yeah,
I strictly counter trend.
I think that the if you're trading crude, then yesterday, I didn't want to do that. Yesterday's low, which came in, it's because my English is awesome. right around 80. Yeah.
Yeah.
That spike low from yesterday is going to be a big deal. So I think
Yeah.
if you're bullish, that's fine. You get below 80 and you don't want to be bullish anymore. I think that's where the rubber meets the road for bulls. Hey,
on these three drives, I'll just finish. I want people to know you don't have to trade them and get short, but you can also use them that if you're long and now you've had 2 consecutive highs without momentum confirming, that it might be a good idea to liquidate some of your longs.
Yep.
Okay, you don't have to initiate a trade, but it can also give you a message about, hey, you've had a nice ride, the market's not confirming, maybe I should go to the register.
Yeah,
You're
exactly.
seeing-
A lot of us did that yesterday up at that 135. I even had a separate short against it, just playing the big figure. I made 20.
You have an
20 pips out of it.
advantage.
I
FIFO.
let it go all the way at 134.66 when we hit this 127% extension. I let all of mine go at that time and bought the dip yesterday. So yeah, I mean that you use these not only did you point that out, Dale, these 3 drives, but you use these technical extensions to pull profits too. I mean, that's important. Hey, real quick, I know we don't have any real data today. I just want to ask Stelios. I know you're watching for inflation and continue to drop. What's going to be on your radar if that happens? If you get what you think is going to happen, how do you think we should play it, Stel?
Well, the two scenarios I have. First, if inflation is as expected or stronger,
buy silver, and then the other one, buy silver.
If inflation is as expected or stronger, I think we should be selling gold in the short term.
Woo!
I know it pains me to say it, but it's at support.
That make or break here, isn't it?
It's at support, yeah. So and if it's weaker than expected, well, I want to be short the dollars against something, and that something will probably be against Ryan. I want to be short your dollar CAD, because that also is at a pretty important level. We're at a what is it? It's the 200 DMA, right? Is it?
It's the 200 DMA right here,
and also it's a fib from the. I need to
127% extension, 618 retracement.
You
can see it all right here.
There's some confluence there. Sorry,
we've just tapped that MA as a high.
Yeah. So I think that's on the verge. So I whenever we have some big event like that, I want to look at the 2 alternatives with 2 instruments which are on the verge of breaking out or breaking down or whatever. So
and Steve isn't here, but I'm gonna just pretend I'm Steve. Okay, you guys ready?
Yeah.
All right, stand by.
Listen.
Look. Listen. If we have weak CPI, listen. The US dollar Norwegian krona continues to be, the Norwegian krona continues to be strong under the 200 DMA. Look, that should, continue lower. There you go. So there's my best Steve impression. So anyway, but just like the dollar CAD, we're trading below the 200-day moving average. And so I think if you really want to play the dollar to the downside, maybe the US dollar Norwegian krona, US dollar Canadian, might be some good opportunities. But Dale, I know you have a guest and we're running into our guest time. So I want to say thank you all for being here with us. Oh, he's not. Well, then, well, then we'll just stay here. I'll just stick around and continue to make fun of Steve.
I started hunting.
Okay.
You have to get the roll. You have to get the roll of your tongue.
I can't. Can you do it, Stelios?
Stel, you do, Steve.
You can do Steve.
You got it. You've done it.
Sooner rather than later.
All right.
Dollar CAD is
There
going
we
to break.
go. There we go. All right.
We love you, Steve.
We love you, Steve,
man.
I
Just in
know.
case you're watching this recording, we love you.
We're just more jealous if you're at the damn.
We just miss him.
Now.
And, so we're trying to imitate the real thing because we miss him.
Yeah, this is true. But Stelios, did you want to elaborate a little bit while Dale's searching for his guest?
On what in general?
Yeah, I do no, just on your idea with the dollar CAD, just in case the
Well,
inflation
I
data
also
comes in a little weaker.
Yeah, one of the reasons why I think it should have been trading lower is because of oil. Same with dollar Norway, right? Theoretically, well, the problem is that CAD and NOK for the past year or so have not really been correlated with oil, at least not as well as they had been in the past. I remember when I was trading in NOK, years ago, it was, tick up with oil, tick down with dollar Norway. It was yeah, exactly. So it was almost a 1-to-1 correlation. Now it's like, who knows?
That's
So
why
this,
so many desk traders trade the Nakisaki,
yes.
the Swedish krone and the Norwegian krone is just from that correlation over so many years. It was just a very, very common trading currency amongst desk traders. So
Yeah.
I heard a lot about that, and it's weird how it's broken away. That makes me think. And what you take a country like I'm going to just talk about this just because Dale's searching for his guest, and we're taking up time on a summer day during the doldrums season. So we got Norway, who's a big, the big producer and exporter of crude oil. What happens to a country like Norway when you eventually? I don't think fossil fuels are going anywhere in near term, but long term, I do think that dependency of everybody is going to decrease significantly, and crude oil is going to be only used. Like if you fast forward 50 years from now, crude is going to be used in probably a lot of commercial stuff, but maybe less in consumer goods and products that we as consumers buy. What happens to a country like Norway?
Well, that's the thing. A country like Norway, which is very prudent, they've already thought about this years ago, and they have their sovereign wealth fund, which is over $1 trillion.
Yeah.
And it's something actually the Saudis have started thinking about. Remember what was it called? The plan 2030 or something like that. They had like a 15-year plan.
Hey, they bought Live Golf.
Sorry?
They bought Live Golf, or made Live Golf, and they tried to flip that, but they're going to end up paying money for that anyway. But whatever.
Yeah, but it's you have to. They're aware that this thing is going to end at some point, so you have to build using the profits from oil and gas. To do something else, and that's what the Norwegians are doing. So I don't worry about those guys. I really don't. I think it's an amazing country.
I would give Dale's left nut to go to Norway sometime.
I hear the women are beautiful too, aren't they?
Have you watched the soccer team? Holy cow! Just kidding.
What did you say?
Yeah, Blake wants to be the towel boy for the.
That's right. I would I would give Dale's right nut to do that. Hey Dale, any luck on your guess?
Yeah, Peter's here.
Oh, Peter's here. Okay, but real quick before we bring in Peter, K-Man, you were saying something?
No, I was asking what Dale was saying, because indeed Norway is preparing the future. They have wind as well, wind energy. They still have a lot of gas as well, so they are still safe for a number of years.
Yeah, I was going to say I've got a lot of gas too. Oh, with that being said, I want to thank everybody for being here today, and for hanging out with us. Dale, you have a really good interview, so make sure you guys stick around. And also, guys and gals, remember, we will be here tomorrow covering the CPI data live with you all. So have a great have a great interview with Peter. Thanks, Stelios, K-Man, Ryan, and everybody else for being here today.
Look forward to the action.
Thanks, Blake.
Look forward to the action tomorrow, guys.
And Ryan, have a great trip. Have fun paddleboarding.
Cheers, guys.
Ryan, we'll miss you. Enjoy though, bro.
I'll bring you back a stick of rock, mate.
Oh man, okay.
A stick and rock. Just what Dale wants.
Stick of rock.
I'll put it on my desk, man. I really will. It mean a lot to me.
Here's your stick and rock. Sweet.
All right, guys. Thank you very much. And Peter Goodburn, really great to have you. Good to talk to you. Great to have you. There are those Peter Goodburn waves. How are you, buddy? Can you unmute? Oh, let me do it then. There. You have to click it, Peter.
Okay. Can you hear me now?
Yeah. We're live.
Okay, apologies for being a bit late. I had a Zoom update come through when I registered on to come through, and it took longer than I thought. So apologies for that.
Okay, no big deal, buddy. We're here, and it's great to have you back, Peter.
Thanks for having me. Yeah, thanks. Tell me, in your opinion, you probably saw a lot of the news yesterday about Moody's downgrade on regional banks. How does that sit with you?
Well, I've been saying that I think this is all by design for all of these banks to fail, because in order to sell CBDCs to the public, there has to be a confidence crisis and a lot of fear. And so people have to lose trust in the banking system, and maybe even go through limited withdrawals, which I think they're already doing in Australia, because you're not going to sell a central bank digital currency. It doesn't even come from the treasury, just because, like in COVID, it could carry the virus and other diseases. The cash is dirty. Okay, they're going to need more than cash is dirty to get people to convert. Usually it takes a lot of fear and belief that the new thing will be better and fix things. That's my view.
Yeah, no, I recognize that. I mean, this whole idea of digital currency is just a prelude to control, social control.
Right.
And you know, we've been discussing that in-house here quite a bit over the last 12 months. Well, even longer, obviously, the pre-run of COVID, but it's basically a small fraction of what's undergoing in the sort of the manipulative world of politics these days. Unfortunately, there's so much corruption going on that we're heading down into a bit of a black hole, and I'm not sure exactly where it's going to end. I think I'm a born optimist, so basically, I always think that we're going to find a solution to prevent sort of the industrial complex from taking over completely control and using us as beings of social credit systems and stuff like that. But I'm hoping that the financial system will survive in some form later. But I think we're probably about 3 years away from an implosion of some sort. And this comes down to
because you think that when this sell-off that may be beginning completes, that would be the end of wave 4, and that there's still a 5 to come. And it's hard to see financial big failures unless that's what generates it, and that the dollar is a sacrificial lamb, and that's how they get the market to recover from lower levels. So I mean, we could start with the dollar here, Peter. Looks like you short term looks like, you know, this 285 level is important, and we're going to get a chance to buy the dollar around what, par and a half or so, where that big spike low happened a few weeks ago.
Yes, I mean, I think first of all, I mean, talking about the dollar, I mean, we're actually in the bigger picture. We're talking about a dollar demise of about a 50% sort of devaluation, and
well,
and
that's how we get to CBDCs.
Well, that's it. Yeah, and you know, this is part of the makeup. I mean, obviously, before we start getting sort of social credit systems and things like that, where the control comes, we're going to have the final phase of the inflation pop, which is a theme I've been talking about since 2010, actually.
Yes.
And where commodity prices, the commodity super cycle actually stopped, well, basically ended in 2006, 2008, just before the financial crisis. And commodities are going through in a sort of inflation pop, which is part of the inflation, the real inflation that you're seeing in the last 12, 18 months emerge as well. It's all part of it. We started with an asset price inflation, and then we go through into food and energy and inflation of that kind in the last 12, 18 months. But that's still bubbling along, and we've got the inflation pop still running through until about a couple of years' time, and then the bubble bursts, and that's when we're going to get this whole digitalized currency and social sort of credit system coming through, which is a level of control. I'm hoping that we can avert that. In some case, humanity is going to have to get itself into action before then in some form of overture, which will basically eliminate that risk. But
I mean, what can you do? Is there really any way to prepare? I guess people who buy Bitcoin believe that they're preparing for something like that.
I don't think Bitcoin's the answer. And I think some years ago, when Bitcoin was still in its early phases, I talked about the fact that Bitcoin would eventually come under similar controls as the Gold Act of 1933.
Okay, it'll
ultimately make it illegal, or it will come under a surveillance of control anyway, which is what you're seeing with the SEC at the moment.
You mean within the new ETFs are a way for them to surveil?
I think the ETFs is basically a way for them to appease the push against their digitalized currencies.
I see.
It sort of legalizes it to some extent, and so you can trade ETFs in Bitcoin or whatever. So it sort of takes away that stigma that it's a banned process of financial play. But so they're trying to appease it that way. It's a bit of a smoke screen, really. But ultimately, it's a level of control. The problem is that if you've got a digitalized currency like that, what happens if you turn off the internet?
Yeah.
Or you do what China can do, which is control the internet and certain platforms. As soon as
you have to show your ID at bridges and traffic stops, and you never know when you show it if you're going to be allowed or not allowed to do something.
Or you have an app on your phone which is a swipe,
right,
where you can't get internet connection unless you swipe first or whatever.
Right.
I mean, things like that. I mean, we're talking about some strange stuff now, and we're
very
not talking
dystopian,
about markets. Yeah, sorry, I wasn't really prepared to talk about things like that today, because these are really hot subjects, and we do talk about them to our institutional clients, and it pops up more frequently than you'd like to think it would. But we do know we're on a sort of a time limit here, and ultimately, and maybe I show you what the dollar looks like on a very long-term basis, and then we flip back to the short term. But
I think you have like targets in the mid-50s or something before it's over. Do you think this new currency, Peter, that the BRICS are coming out with and launching, China launching the 22nd, is going to have any impact in the currency markets?
Difficult to tell, isn't it, really? Difficult to tell at the first stage. The markets are really sort of work on perception.
48.
They work on a lot of perception. Well, I'm just going to show you the dollar index over a very long term. This is going back to 1660s.
Wow.
There's some really nice Elliott wave patterning and proportional relationships in here. We go back, really, the most important point was really this low in the American Civil War period, so 1863-4, and then you go up in 5 waves to 1985. And so actually people are being basically mindset into thinking that the dollar's a strong currency all the time, but actually it's been weakening since 1985, dropping down like this. And we actually, in September, when we were at 114.78, we actually ended up here at 114.78. We've ended up completing a big running flat pattern that goes back to 1987. And we're getting ready for wave C declines. So we've just do a normal 61.8 or 38% extension in this case of the initial swing down, and we arrive at 51. So we're going to halve in value, and that's basically means a doubling in the euro dollar as well to the upside. So this is a very long-term perspective. Yeah, the euro dollar would double, go up to sort of like $2 to €1.
Is that going to be the best performing fiat, or will Aussie be?
Good question. Well, the Aussie dollar on the very long term looks a bit like this. Let's have a look at the. That's a
because
quarterly.
isn't the Aussie getting closer to your targets on the downside, and it's been the weakness? That's a pretty
Yes.
good move from 60 to, that's a triple.
Yeah, so
almost.
that would outperform. Yeah, so
Okay.
that would outperform. Yeah. I mean, this is not so dissimilar to the idea of the inflation pop in commodities. So copper and particularly crude oil. You know, I think crude oil can go to $200 a barrel easily, maybe a bit more. So this is basically in tune with that. We've, I mean, people obviously look at in the commodity sphere. You look at sort of Australia, and then you start thinking about iron ore. But sort of the long-term iron ore prices probably not going to do something fantastical. I mean, yes, we've got a very long-term iron ore chart here, which is going back to 1900. But you can see that we've got a target of about $360 a ton.
Wow.
So yeah, that could be. I suppose that could be tripling in that case. So coming back to the Aussie dollar, yeah, it would be an outperforming fiat currency if that's what we've got, and copper prices will go up a lot as well. So these commodities have got a lot to do, but not right now, because
Yeah, so we're coming near inflection points and everything. You believe we've reached an inflection point in the indices?
Well, I do think so, because here's a chart on the S&P, which is going to go in tonight's report, which is the for those of you tuning in, if you haven't already taken an idea or look at the Elliott Wave Compass report. We publish this twice a week, and this is going in tonight's report. Actually, I'm just staring at this at the moment, wondering if the Eurostoxx 50 and the Xetra DAX has just started to turn down. They've met sort of like minimum upside objectives, and they look quite weak. So I'm not sure if the S&P is actually right now going to get up to my target, which I had last Friday, which was 45.60. It's an attempt back to wave 4 proceeding. But the important thing here is that the bigger decline is coming, because we've had now a 5-wave drop into last Friday's low. If you remember, last Friday we had that sell-off
in the last half hour, right?
Yes, and that produced a 5-wave.
When everyone's away.
Yeah, everybody's sort of shut shop and going
left.
home for the weekend.
Yeah.
And then there's a late sell-off, and it's sort of changed.
And then it's in your face if you sold that close on Monday.
Well, that's right. I mean, we did mention that that did leave a diagonal pattern, a 5-wave diagonal in that extra swing down. And you can see it also in the Dow. Let's have a quick look at the Dow as well, the Dow futures. This is, you can see that the extra swing down on Friday night produced this diagonal pattern. And we've got some sort of expanding flat going on in there. And the problem with markets like this is that, well, you can see that wave A has already gone back to wave 4 proceeding. And sometimes wave C will end up as a running flat. In other words, it doesn't quite make the targets that it would do under the normal conditions of an expanding flat. And wave C is therefore a little bit short. And I'm getting a little bit concerned looking at the screens at the moment that we may be involved in something like that, and the markets are getting ready to tilt to the downside straight away from current levels, because it's all looking a little bit fragile. And my main let's go back to the
what
S&P.
I'm trying to square, Peter, and is there's going to be a period if this count manifests and your count in the dollar manifests, that people are really going to be off sides, because people would expect the dollar to do a whole lot better than just a bear market rally to 108 with this kind of risk off happening. So a lot of the decline is going to happen with a weakening dollar.
Well, it could be, yes. I mean, that is a very good question, because, you know, we initially recently diluted the upswing, because we originally thought, well, okay, we're going from 99.5, and we actually thought that it might trade up to the 76% retracement level, which is about 111 something.
Right.
So we looked at that. We're recently sort of doing a lot of currency work for our trilogy series, which comes about mid-year, and we're finishing it off at the moment this week. And when we did a lot of cross-currency relationships, we found that it might be a bit too ambitious for the dollar index to get to 111. So we thought that maybe we could, we might have to do with getting to the 61.8 area at 109.14. But yes,
there's going to be a period where people are probably going to be saying, well, look, the dollar is weakening. How come we're not seeing risk on? I mean, that's down the road, but
yeah,
I'm just saying that it doesn't look like, for the magnitude of decline, unless it's just, shows how weak the dollar is, that you could have a magnitude decline of what you're looking for in S&Ps. And only,
well, that brings me to an interesting
108.
subject about dollar yen, because dollar yen is a fascinating one for me, because when we were
I've been trying to short it all week. It's in my face every day.
Yeah, well, I think the in terms of dollar yen, we had
It's at 78.6 back now. If this is a 2 up here, 44.
Yeah, it's getting quite deep, and it might even take out 143.89 slightly, but I don't think it's going to break 145 figure, this 07 number, because that preceding upswing from January here, 127.22, was a really nice. If I just put my Fibonacci extension ratios in, you'll see if I extend, this is a typical measurement, by the way, for everybody listening in, for a zigzag. If you extend wave A like this, if I'm double clicking, I'm going to extend that by 61.8, and you'll see that it came within about 7 pips of the top there, and
nice call.
which was good. Yeah, it was nice. And now we've had 5 ways down to 137.24, and we had a nice what looks to be a 3-wave action up, which I think probably is a double zigzag actually, but it's got to 143.89. That's the 38% extension level of this initial swing up last week. Now, you might think, well, okay, look, if the dollar is trending up to sort of 109, 111, let's say, over the next several months, and we have that sort of going dollar bid because of safe haven, it's attracting safe haven status, then why should dollar yen drop? Well, I think
that's a safe haven currency too.
But I think, yes, exactly, because I think the yen, which is basically being used as a funding currency for the last 2 years, is suddenly going to flip, and it's going to become a safer haven than the dollar.
Interesting.
It's going to become a safer haven for the dollar. Well, how do we substantiate that? Well, okay, we can go through the mechanism here, which I've just explained, 5 ways down to 127, and this 3-wave rally to 145. Okay, that's the normal function of Elliott wave. That should mean that we encounter a downtrend, probably sort of looking something like this, where the dollar yen starts to accelerate down like this now. But we need to verify that. What does it look like against, say, something like, what does the yen look like against the euro? So if you take a look at the euro yen chart, we see something pretty interesting on the weekly, because if we go back to 2016, which is this low here, so this is 105.55, you'll see that we've got a really nice zigzag finishing. So again, we can extend this by 61.8 and derive where we are at the moment. And this, I mean, it could squeeze out a tiny bit more to 161 if we extend the preceding downswing by a 23% ratio like this. We get to that 161.25 area, so it could squeeze out a tiny bit more. But basically, this is on a very short fuse now, because it means that this big upswing is about to complete, and it's wave B of an expanding flat. So it's basically intermediate wave 2 in brackets here, which is an expanding flat, and wave C is going to drop down in the next few years. So the initial stage of yen strength is going to be all about a safer haven. Here, this drop down to 136 is all about the next several months, a decline, about yen being a safer haven than say the dollar.
Interesting.
And so therefore you're going to see, because of that, you're probably going to see a slight dilution in the dollar index's rally up to 109, 111. It's not
Right,
going to
'cause-
break the 114.78 high
because of the yen.
because of the
isn't
yen, and
going
also
down.
because of the Swiss franc as well. Because if you look at dollar Swiss, I'll see if I can find that quickly. If you take a look at the dollar Swiss franc over a weekly chart, sorry, this is trending down in a big way.
Yeah.
This is trending down in a big way. The
Just
Swiss
had a
franc,
big breakdown. Yeah.
yeah. So you've got two G10 currencies within the dollar index itself, which are going to be a stronger safer haven than the dollar itself. So there's going to be a weakening on that slightly. It's going to be a slight dilution for the dollar index itself. The weakest currencies, I think, are probably going to be the Canadian dollar. I've been shorting that against buying the dollar itself. So I think that Canadian dollar will probably end up trading up to 140.40. And you can see it's already pushing up.
Yeah,
this is a nice
very
double
strong.
zigzag correction from October. So this is trending up to 140.40. And it's just a question then. I'm hoping that the Aussie dollar doesn't break down too much, because I think
That we're going to put in a higher low.
well, I think this upswing is 5 waves, which should eliminate the possibility of it breaking below there, but it's going to be a bit of a tight call. I'm not sure what's going to happen there, but I'm more confident about shorting the Canadian dollar at the moment, because I think
Will the
also,
Hong Kong dollar break the peg?
oh my God.
How long
I
have we been talking? How long has the market been talking about it?
Well, I was living in Hong Kong 25 years ago for a while, and I stopped looking at the Hong Kong dollar peg then, because it wasn't really doing much. It's not really an exciting place to be trading, and it's a bit like waiting for yield curve control in Japan to be lifted, so that you can make money by shorting the JGB futures. I mean, I've got clients who are doing that, but quite honestly, it's like waiting for paint drying, isn't it? I mean, in a sort of a winter environment. I mean, there's a lot of other exciting things to get involved in.
Yeah, like watching paint dry.
That's more exciting than the dollar peg being dissolved in Hong Kong.
Why don't we wrap it with, I know you brought me a present. I know you brought me an Apple chart today.
Oh, well, yeah. I mean, I have been updating some of these components, the big tech components.
You've been commiserating with me from afar, and I know you have a count here.
Yeah, here it is.
Okay.
Yeah, I mean, look at this Apple drop now.
I mean, when the market starts off like that, Peter, isn't that a pretty, like, I mean, it gapped the 50-day on that day after earnings. So it doesn't look broken to you now? It
does look broken. I mean, we had this double zigzag down here to 124, but I thought that extending this by 61.8 would have been enough to revisit the high.
Well, everything's stretched. I mean, what was your self-talk when the S&P kept stretching?
Yeah, I mean, it has stretched and continued to stretch.
Yeah.
The most important thing, I think, with the S&P is that we didn't break above the Jan 22 highs. And we're now getting a nice reversal signature in the form of that diagonal we looked at earlier. But these big techs,
before I just want to say, looking at this Apple chart, I just want to remind all our listeners about this. One bad apple don't spoil the whole bunch, girl. Donny Osmond.
Good God, did he? Yeah, that's going back a while. I wouldn't have remembered that one from Donny Osmond. But no, there's a lot of these big tech stocks which are turning down. One of the ones I keep getting asked about is Tesla, and on Tesla you can see that we had a really nice 3-wave advance from last year's lows, or from January's lows up here. I think that's finished and we're heading down as well. A lot of these big techs have run their course now.
But a lot of them aren't going to make new lows, aren't going to take out their October lows, are there?
No,
summer?
they won't. No, I mean, yes, Apple should, but this one won't. But you can see the percentages. If you work out the percentage declines, they're all about 35-40% drop, maybe some
Yeah.
more in some cases. So
Yeah, that's more.
if you look at the individual patterns, you'll see that it's the same with something like yeah, I think we've got Facebook, Google here.
Yeah,
You can
look,
see
that's
that
just
that
a
won't break it. That
correction.
won't break below the November's lows. But you got this
Yeah.
big 5-wave advance.
Yeah.
And as a fifth wave, it's pretty stretched. You know, that's we don't normally extend a third wave by 61.8, but we've had to do it in this case.
So what led this rally are going to be the ones you're going to want to buy year end.
Eventually, yeah, absolutely.
Could be year end.
Yeah, but I think it will probably, it's either year end or first quarter sometime, depending on how fast we go. But I think these are going to be unwound pretty dramatically. And I think that the market's going to be pretty surprised. They're still lingering near the highs, as you can see here. But a lot of these tech stocks, these big tech stocks, which are the components of the FANGs index, the FANGs Plus index, are going to be hit pretty hard, I think.
Isn't it interesting? They wanted to rebalance Apple before the high. So it wouldn't have the same impact on the NAS 100.
Yeah, I mean, there's always that manipulation going on, and we've seen it before. It really mucks up my charts, I have to say. We have to rewrite them all through several different time frames.
So, you know, Peter, the narrative's going to be now after this run, people are going to buy every dip. They want to buy a dip to 4,200. That's where the breakout is, all the way down to 3,900. How are you going to know that this break, when we get this break, is going to have legs and not just be a corrective decline?
Well, I mean, the short answer to that is quite simple. From an Elliott perspective, you know, we'll be looking at checking to see, first of all, 5-wave development to the downside in every case.
Yeah, right.
So we'll be going through, you know, we do routine checks. I mean, we'll be extending this diagonal by 61.8 because and if we get below that, for example, that number, and you start getting price expansion, then you know you're not in a C wave of a zigzag, but in a third wave. So we'll be doing something like this.
We get 1, 2, 1, 2s.
We'll just extend that by 61.8. So you know, if we start getting beyond levels like 43.92, you know, you know that you're in a third wave acceleration point, you know, which would be consistent with what we'd expect down here. And we've also, you know, got some preliminary targets. I mean, our big target is a 61.8 extension of this at 28.79. And if you cut 46.34 to 28.79 by 61.8, you'll get this number and this number. And so we've got interval numbers where we're looking at sort of some harmonics coming in. And if we deviate from that and you've only got 3-wave patterns, then you might raise an alarm signal. But I'm pretty confident that we're going to see a realization of this larger decline because we've got so many different sectors which have underperformed the S&P, which are limping up from last October into clearly defined zigzag patterns, which are rolling over to the downside. And also we've got the banks, as you saw Moody's from their downgrade. The banks index, the KBW, looks very, very bearish. We've been running up actually nicely since May's lows into corrective patterns, but we're finishing those now. So, yeah, things are beginning to look as if we're going to get a commercial real estate problem.
Yeah, Citibank never rallied with the rest of the banks, and looks like it's on the verge of a breakdown.
Okay, I haven't seen Citibank, but I do know that the banks index itself is fast approaching its upside targets that we had in May, and they're all turning around. Plus, together with some of the regional banks that we did actually put in our mid-year report, which is still available, by the way.
Speaking about reports, I read Peter's stuff. It's excellent. And what's the best way that people could get a hold of you? You want to show your website, Peter? And what a great discussion on currencies and thinking about the Swiss and the yen in face of, you know, dollar rally, how they could perform, which most people wouldn't think could happen. In fact, I did an interview, and one of the comments was, how could Dale be bullish a dollar and bearish US dollar yen? Doesn't make sense. And
well, hopefully that's answered today with looking at the cross rates. I mean, you can also have a quick look at sterling yen. From 2016, there's a big 5-wave pattern completing up from 2016. So have a look at that if you're still unconvinced, and just look at some of the cross rates with the yen. You'll come to some conclusions like I have, that the yen's going to be a very strong currency. How do you participate in what we're doing here? Well, we'd be excited to welcome you to the Elliott Wave Compass Report. You can go to wavetrack.com, and if you go to products and where do we go? Subscriptions. Sorry, registration and subscriptions. Go to subscription, and the first subscription tab is here for the Elliott Wave Compass Report. Is $39 a month, but we're going to send you a couple of reports per week in a PDF format, and you'll also be able to log in online to look at all the charts there as well, with some other features. So yeah, that would be great. If
would they get your mid-year updates and commodities and that you publish?
Well, we've got those available. They're over here. If you go to the main page again, you can see the mid-year reports are pretty much available. Well, the stock indices was published in June, and the commodities in July. These things actually are really big heavyweights reports. There's 2.5-hour videos accompanying those.
Wow.
And there's over 100 or more charts in each. I think the currencies and interest rates ones, which we're going to publish within the next 4 or 5 days, has got over 150 charts of currencies and interest rates in there. And the video is, I think I may have even done a record 3-hour video. But keep a lookout for those. And if you want details of how to purchase those, you can just go into the main website and click on these, and it will take you to actually our blog. And there's a summary of what's included and some details at the very bottom, which would tell you about how to subscribe to those. So yeah, take a look if you're interested in those. It's very informative, and I think people have already raved at they're very complex, but also at the same time they're extremely informative. So yeah, that would be a great place to go.
Okay, Peter. Ingmar is saying thanks. Great interview.
Thanks, Ingmar.
I agree. And this summer, may you have health and prosperity, my trading warrior brother, and really enjoy talking to you.
Well, as always, Dale, thanks. Yeah. Thanks for inviting me on. Thanks to the boys for also, allowing me to sort of present some things today. And I just really hope that you too, you have a great summer over there, and try and find some rest and relaxation in between, because these markets are going to keep us busy. You know that.
Yeah, we still have to fight the battles into, the dystopian future. I love you, my trading warrior brother.
Thanks,
Peter
Dale. I love you too.
And Peter Goodburn. You're very welcome, Peter. Check him out. You're welcome, Salim. Could join the team in 4 minutes on the morning edge. Don't just count your pips, count your blessings. See everyone for the number tomorrow.